it's a very good target. It's a good target to make a decision on the 4 hour. It's just like the weekly high or the daily high. It's just that 4 hour chart, and the 4 hour chart is a very popular time frame to watch. A lot of millions of traders watching that 4 hour time frame. And software kicking in. I mean, that's what it is. It's all it is. You can see it. You can visually see these bots kicking in like shinobi right on that 4 hour high. Crazy when you just see it like that. You realize that, man, like there is absolutely something here. Like 100% there's something there. I'd like to get back into this. I want to watch this and see here, but that might have been our high of the day, guys, right there. Was it a higher? It was higher on the NASDAQ, barely. It's possible. Our profit's running now. GU starting to run. AU running. Yeah, all the dollar shorts against the dollar. Yeah, I'll say GU's gone back into pretty good profit. Looks like the dollar's pumping a little bit. Yeah. So that's what we want. We want dollar up, risk off. That would be the ideal scenario here. And maybe watch gold too, because that's not a good candle. If that closes like that, we might want to consider shorting pullbacks to break the low because of where this is. This is already been up quite a bit. It's a possibility that runs and breaks the low. Yeah, I mean, that's your candle right there. Assuming that closes like that in 6 minutes, it's going to come back and try it again. And this is why you take the small risk first, just to small piece, then miss the whole thing. But the reality is there'll be another chance. As soon as if this closes like this, we'll pretty much know what we're looking for. That's a pretty significant rejection, and we'll assume that the high is in at this point and be selling the bullish candles, selling green candles for the rest of the day until this pulls back again. Something like this, when your high comes off the hash, we're targeting the top of the range. The top of our opening range box is a very likely stopping point for that to come back to. It just does. If that's going to be your high on the hash, it's very likely going to come back to here and start to kind of consolidate on that. At least that would be the place to make the decision. So at least there's that. Yeah, part of it actually may get back in the NAS depending on what happens here. I want to see what happens on the next candle, but maybe we got something here. Maybe we found the high of the day, and if we found the high of the day, there's room to at least get some scalps to the downside, if not a little, half a day trade there. Dollar up is another thing. So yesterday's euro dollar, Aussie dollar, pound dollar is looking much better. Like that's going to continue to go. Not a lot of profit, like $12, but still got plenty of room to go though. We're just getting started. Got plenty of room to move. Probably hit target if things will move. Even like a little quarter of a daily move or a half a daily move, probably end up hitting target. So not bad. Trying to work through it. Pound CAD never really broke the high. Yeah, so at this point, yeah, the thing that's really changed a lot here, gold for sure. And we got a dollar pump too, so not the best entry, but probably going to break the low. So just cautious with the longs at the moment. It's just got a little bit of back and forth. And we still got time to open the market real quick. Actually, let me go eat something real quick. I'm going to make sure I have this set. I want to, if this pulls back, hold on. I'm going to send an alert back on the NASDAQ. I'm actually more interested in this. If this pulls back above that hash, I might take a shot at this. I want to see how this closes. Like just a few minutes before the market. I want to go eat something real quick before the market opens, so I can get back and we can watch the open. I don't know if this is going to consolidate and try to break the high, or if that's going to be the high. I'm trying to figure this out. I'm going to make my eggs real quick. Got it down at least 5 eggs. Get my calories in. Trying to get back in shape. I've actually done pretty well the last month. Been doing really good, but got a long way to go too. Trying to rip it down for summer. You got to start now. Let's see. Yeah. So NAS, the Dow, obviously on the broken high. That's going to be a thing. Whoops. Get this where I can see this on my phone. Put the alert on the hash. If we pop above that hash, I might try it, depending on what happens here. Assuming this candle closes weak like that, it's a good close. How much more is the question. I think we may be pushing on the highs of the day here, and maybe it rolls over. We'll see. I think that's it for the news for the day. Bailey speaks. Probably nothing really is going to happen there. Beige book, that's funny. I don't think anybody cares about that anymore. OPEC tomorrow. This was actually drama when they changed the date. I remember oil made that move, that big crazy move when they changed the date the other day. So that may be something to watch. Oil's in kind of a weird spot to be trading it on OPEC. Possibilities of, not really much there that they're going to say. Not in a great spot anyway. I wish oil would come down and break that low, because I know there's a good trade there. It's waiting for us. We just got to be patient. Well, let's see what happens here. Is that it or not? Give me just a few minutes. Let me go eat something real quick, and I promise I'll be back, and we'll get ready for market open. Let me go ahead and get it done. Give me 20 minutes or so. See if I can get it done. And good morning, by the way.
You do if no one asked.
To us, he's coming in from the bars. But I'd love to know what Ed Ludlow thinks about the clumsiness of what we've witnessed with Apple and Goldman Sachs.
Some of the details show how difficult it was from the beginning. For example, Apple's desire for there to be a very high approval rating, which led to a disproportionate number of charge-offs, things of that nature. But at the same time, this is sort of the crown jewel of the effort Goldman was really going for.
Not in acquaintance here. I can find one AirPod, but I can't find the other AirPod. Can I go get a new pair of AirPods?
Buy now, pay later. Go ahead.
Yes, thank you. I'm aware of that. Futures up 21. Bloomberg surveillance.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
Today's CFO has to be much, much more than a bookkeeper.
One of the most important things is looking around the corner.
We have to let go of the traditional legacy department store.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
You also have to be credible business leaders in order to really impact the business and steer the direction.
We're like biologists. We need to deeply understand the financial DNA of a company.
People just come with a playbook and say, okay, we're going to roll that. Don't do that. Think longer term.
It's an amazing time to be in this role. It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the chief future officers of some of the world's most influential companies. A new episode every month, only on Bloomberg.
Some people might say that insurance is a boring business, but is that not the case?
No, I find it very interesting. I mean, you're not doing the same thing all the time. I liked it because it had a balance of doing different things at once.
through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point.
What is the lesson or the observation?
I think that it's hard to put your head around any narrative. Let's just be honest. We've had
AI and robotics have modernized factories, but a strong cybersecurity strategy is paramount. Security is a top driver of business confidence in manufacturing, but companies underperform in this area. Welcome to The Network Effect.
It's easy to take nature for granted, but we need clean water to flourish. We have a real deadline. We have the tools, and together we'll find the solutions.
They use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
Peter Zaffino, AIG's Chief Executive Officer, speaking with David Rubenstein, and you can watch more of David's conversation with Peter on Peer-to-Peer Conversations tonight at 9 p.m. in New York. I have to say, that really was the snippet I wanted to focus on, this question of artificial intelligence and how it's transforming, in particular, the financial industry. Tom, we were talking yesterday with Mike Mayo about just this, this event.
And also the avoidance of the shocks that something like AIG sees, whether it's a given hurricane or war in Europe, or might I point out the Eastern Mediterranean. I mean, it's a different analysis by an insurance company than worrying about what it's going to do with productivity down the income statement. Can we get more gross margin about it? Can AI help them with disaster is the heart of the matter.
I am so pleased that we get to speak with David Rubenstein, co-founder and co-chair of Carlyle Group, host of Peer-to-Peer Conversations on Bloomberg Television, because David is somebody who talks with all of the executives across Wall Street, Main Street, and beyond to understand how they're dealing with some of these transformative technologies of the moment. And David, I want to start there, kind of where the similarities are in how some of these executives are thinking about the developments in artificial intelligence in generative AI.
Well, everybody wants to be an expert on AI and figure out how it's going to affect their company positively or negatively. But honestly, nobody really knows for sure yet how it will work. We're really in inning one of artificial intelligence in terms of how major companies are going to use it or have it used against them. So everybody's trying to hire artificial experts or get people into their firm who can help them assess whether artificial intelligence is going to be useful to them or helpful to them. And nobody really knows yet. So I can't say anybody is certain how it's going to impact their business yet.
David, Mr. Zaffino steeled at Marsh McLennan and others, and then on he goes to AIG, where different than other executives, he has to deal with disaster. What did you learn about how he handles the unexpected?
Well, insurance is about dealing with the unexpected, really. And so AIG became the largest insurance company in the world for many, many years. And as a result of that, it had enormous tentacles throughout the entire financial complex. It clearly extended itself too much, didn't anticipate problems that arose, particularly in the mortgage area, and as a result had to be bailed out by the U.S. government to the tune of about $180 billion. Now, that money's been paid back with interest, but AIG is no longer the biggest insurance company in the world and doesn't have quite the tentacles around the world that it once did. But still a very profitable company.
David, a newsmaker yesterday, this is what Rubenstein does. He's steering the thunder from journalists. David Rubenstein with Bill Ackman yesterday on the track that this nation will take. What did you learn from Mr. Ackman, David Rubenstein?
Well, Bill is a very impressive person who obviously is outspoken, has been outspoken on many issues over many years. Recently, he's become quite visible in what he's been saying about Harvard. But he said in the interview, which will air not too long from now, that he's made a new bet. He's made a number of macro bets that have turned out to be extremely positive. One of them, he made over 100 times his money on a bet that he made a number of years ago in the time of COVID. Now he's made a bet that interest rates will be cut sooner by the Fed than is otherwise expected. And if that bet is successful, I guess he'll make a fair amount of money. But that's the big issue that many people are grappling with. Will the Fed decide that it needs to lower interest rates before the political season starts, let's say in the summer or the fall of next year?
Excuse me. Go ahead, Lisa. Please. My fault.
David, is it surprising to you that a big hedge fund manager is focused on making big bets on treasuries right now?
Well, many people are doing that, honestly. The so-called treasury trade that others have done, where he's buying treasuries and shorting treasury futures. This is basically a bet that the Fed will succumb to some pressure to lower interest rates before too long. Now, the conventional wisdom in Wall Street is that the Fed will lower interest rates at some point during the first or second quarter, more likely in the second quarter. I think his bet is it'll probably do it sooner than the conventional wisdom. And I have said publicly before, and I still think it's the case, that the Fed will get in trouble if it lowers interest rates around the political season, because Republicans will say, well, you're helping Joe Biden by lowering interest rates if you do so over the summer or in the early fall. So if the Fed is going to lower interest rates, probably to avoid political criticism, it'll have to do it sooner than later.
David, you mentioned Mr. Ackman in Harvard and the horror of the Eastern Mediterranean. I want to go to your Duke University, where they have a bridge, folks. It's an old bridge called the Free Expression Bridge. And to make a long story short, they had to paint over a pro-Palestinian tone as well. David, I want you to talk to the great and good right now about how those of means and success should deal with their shock at our American universities.
Well, the American university system is still the envy of the world, and our private universities are really places that people from all over the world want to attend. There's been a shock that many people didn't realize how strong the anti-Israel feeling has been in some campuses, and the result of that has been outraged by some alums. Some universities have handled this better than other universities. I'm the chairman of the board of the University of Chicago, and we have a tradition of not issuing statements on political matters or outside matters, and we haven't issued one in this case. But in many cases, other universities have not had that policy, and they've gotten in trouble for issuing statements that don't please one side or the other. It's a difficult way to walk this fine line, and I don't know that anybody has figured it out properly or correctly.
David, a glorious day for Bloomberg Surveillance with Doug Cass and Howard Marks with us in remembrance of Charlie Munger. Give us your thoughts on the hugely successful experiment that was Berkshire Hathaway.
For those who don't know, Charlie Munger was from Warren Buffett's hometown of Omaha. He moved to Los Angeles and later reconnected with Warren Buffett, who he hadn't really known before, but he had worked for Warren Buffett's grandfather at one point in a store. Charlie Munger was an outspoken, very, very smart lawyer who transitioned from being a lawyer to being an investor, and his track record early on was actually better than Warren Buffett's in some respects. They teamed up, became an incredible team of people who were mostly known to the public through their annual meetings, where Warren Buffett and Charlie Munger would answer questions for 6 hours on end. And Charlie Munger was quite well known for his, I would say, dismissive ideas of some other people's thoughts about investing. He was a very fundamentalist kind of investor, and he transformed Warren Buffett. Warren Buffett was taught to buy things very cheap, and buy things cheap, you can always make money. It was Charlie Munger's view that you should buy good companies. Maybe you pay a reasonable price for it, but buying good companies is better than buying cheap companies, which may not be that good. And Warren Buffett gives a lot of credit to Charlie Munger for having transformed his views on the investment world.
David, thank you for joining us today with this remembrance of Charlie Munger and, of course, with your excellence. Look for a conversation with Peter Zaffino, peer-to-peer conversations, 9 p.m. tonight, and hugely anticipated in the next 10 days, a conversation with Bill Ackman that I would suggest moved markets, at least the trading market yesterday.
Well, Bill Ackman has gotten the timing pretty well so far this year. I think it's notable to me that hedge funds have been active players in making interest rate bets. Back in the day, they were more of the Charlie Munger make a big bet on a specific company, including Bill Ackman with his whole Herbalife saga. There is a question of whether interest rates are actually at the behest of some of these levered trades and how much that's played into the action of this year.
The action of this year is the bid is there. Even on moldy days, stocks seem to have, there's just this oomph right now. I guess it's seasonal. Some people would say that. Amy Wu Silverman would say that. But I got futures up 21. For the first time, folks, in years, I'm on like a record high watch on NASDAQ 100, a 16.1 and 16,500-ish is a record high. I've never said that.
It's the NASDAQ up 11%, more than 11% so far in November. It's been a great year, right? We were hearing that earlier this month, the month of November. But honestly, we did see that 10% pull down and boom. Was that enough to bring everybody back in?
I think I've got to see what Apple's Christmas holiday sales are before I can buy my first share of stocks. I triple leveraged all cash. You know, I mean, somebody said, do you really make 15%? 5 times 3? And I said, no, there's a lot of expenses involved. There's marketing expense and, you know, the general counsel has to get their fee. And, you know, net clean, we're double digit, but we're not up at 15% as some people think.
You say that Apple revenues are going to be interesting. How much is it just going to be CPI? PCE, what we get from U.S. inflation, that's going to drive more valuations.
Well, and also, I'm going to go right over to the job economy. What if we get all this secret sauce John and Lisa are talking about in a fully employed America? I have to see on that. What it is a fully employed General Motors, and they will be making cost cuts. They make that.
You know, as somebody coming out of college, it can be very nerve-wracking, not knowing what to expect, whether you'll like your job or not, whether you'll make friends, whether you'll fit in. And here, I feel like it's so welcoming and such an inclusive place to work. You just feel like you're valued.
Want Bitcoin exposure right in your brokerage account? Get it with symbol GBTC. Grayscale Bitcoin Trust, the world's largest Bitcoin fund. GBTC. Bitcoin investing begins here.
The shape of the On athletic shoe is unique. It can't be mistaken for any other brand. The structure of On's C-suite is just as distinctive, starting at the top with a pair of CEOs.
What we realized very early on is if you're adding different capabilities to each other and you do that as equals, then this leads to better outcomes.
Mark Maurer joined On as Chief Operating Officer in March 2013. Martin Hoffman arrived as CFO that July. In 2021, they jointly assumed the CEO role.
We are a brand that needs to be excellent in designing product, in innovating product, but also in shipping millions of parcels from A to B in the most efficient way. So we need to have very different mindsets and very diverse people. Mark has different strengths, I have different strengths, and if you take us together, you just get more.
Companies with co-CEOs are rare, but On's configuration is even more unusual. Martin Hoffman also holds the CFO position. He says his two jobs complement each other.
I actually feel the CFO makes you a better CEO and the CEO makes you a better CFO. Understanding what you build as a CEO helps you to understand your numbers, and understanding the numbers helps you what are the right things to build.
What do you worry most about your economy in Greece? When you look at tourism, it's booming, but it also means some of the islands are overcrowded.
Exactly.
Is there something that you can do about that?
Thank you for asking this question, because I want to make sure that, you know, in 5 years from now, we will not have sacrificed, you know, the beauty of our sort of natural environment at the interest of a very rapid growth. So that's why I'm really focused on growth. Always push for quality over quantity. Very strict in terms of standards. We are actually looking at our local and regional sort of planning legislation across the country to make sure that we know exactly what we can build and where we can build it. There are parts of Greece which have reached saturation point, and if we have to place restrictions, we will, in order to protect, especially islands, which are more sensitive.
Let's get your trading day started. Live from New York City this morning. Good morning, good morning. Your equity market looking pretty good. Up 0.5% on the S&P 500. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Ferro.
Live from New York, coming up, equities heading towards a big month of gains. As one Fed official signals he's most likely done, bets growing, rate cuts are just around a corner. We begin with the big issue, the hawks sounding like doves.
It's a dovish message.
Pretty strong pivot from Fed members, yes, and
that is quite key. That is quite a game changer.
This is definitely adding to the expectations of the market for a cut.
What will be key now is whether Powell reinforces that.
They're going to have to sort of balance the message.
They're trying to kind of thread the needle here.
There's an element of we don't want the market to get too ahead of itself.
If we were to just rewind a few weeks ago, the tune from the Fed was very much about higher for longer.
The trend is very clear.
We do have a slowing US economy.
Inflation is probably coming down.
There is clear evidence that the labour market is starting to loosen.
The Fed is getting what they want.
The Fed is basically out of the way here.
The Fed is likely done hiking.
There's an element of this is our best guess and we're changing it as data evolves.
We've got a couple of important data points in the next few weeks.
And some soothing words from Governor Waller. Boom, bond market rally, yields lower. Let's have that conversation. Crossmarks Bob Dole, Richard Bernstein of RB Advisors. Gents, great to catch up with you. Bob, first to you. We heard from Governor Waller, a suggestion, no more hikes. Governor Bowman saying something completely different. Why did we ignore one and listen to the other?
Great question. I think investors